Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you have joined us for our 3-day Metals and Mining Conference. Our next presentation is from Luca Mining. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Dan Barnholden, Chief Executive Officer of Luca Mining, which trades on the OTCQX Best Market under the symbol LUCMF and on the TSXV under the symbol LUCA. Welcome back, Dan.
Thanks for having me, Greg. Happy to be here. I think it's good to give a little bit of context for how I ended up here as the CEO of Luca Mining. Prior to joining Luca, I had spent 20 years as a mining-focused investment banker, which means that I have seen literally hundreds of companies like Luca, small, emerging kind of companies that grow into big companies. And so I've financed and I've advised hundreds of companies like this. And when I saw the Luca Mining opportunity, I came in as a meaningful investor. I put over $1.5 million of my own money into this opportunity. And I saw just a huge opportunity for us to take this company, turn it around, create a cash flowing, really emerging growth company focused on the metals and mining sector in Mexico. So that's how I ended up here. Very happy to be here and very much focused on building an emerging junior mining company. On the front page of the presentation, you'll see 3 keywords, and those are really the guiding principles for the company, the pillars of value that we bring to the table. And those words are optimization, exploration, and expansion. When we think about the mines that we have 2 operating mines in Mexico, and we're very much focused on currently optimizing those, bringing exploration expertise to those mines. Both of them we're exploring for the first time in well over a decade. And then assuming that exploration effort bears fruit, we expect to be in a position to meaningfully expand the production profile at both mines. So as I mentioned, we have 2 mines in Mexico. One is our flagship asset, Campo Morado. It's in Guerrero. It's about a 6-hour drive due south of Mexico City. In fact, we just hosted a group of research analysts to site last week. The site is showing very well, operating very well, and we're very pleased with our progress there. Our other mine is called Tahuehueto. It's in the northwest of Durango State in the Sierra Madre Gold Belt. It is near some other mines that viewers might be familiar with, in particular the San Dimas mine, which is a part of First Majestic Silver. We consider ourselves to be expert in the mining sector in Mexico, very well connected politically, understand the community relations aspect of mining in Mexico, as well as exploration, operations, and the financial piece. Our revenue from our mining operations is about 50-50 precious metals and base metals. That's we really like that positioning because it is sort of a natural built-in hedge. We tend to see on any given day at least one of our metals going up in price. Oftentimes you'll see gold up, base metals flat to down. Other times you'll see the base metals up and the precious metals down. In reality, we're probably a little bit skewed to precious metals at the moment, in large part because of the outperformance of gold over the course of the last several months. Here's a bit of a snapshot of where we sit today, and then I'll get into where we're going, and then a bit of a deep dive on each of our assets. So for 2024, we released our financial statements last week. We did 58,000 ounces gold equivalent production. We expect to grow that in 2025 by almost 50% to 80 to 100,000 ounces gold equivalent production, which translates into 65 to 80,000 ounces payable. And we see very meaningful opportunities to grow that organically at both sites. We have de-risked operations. And what I mean by that is oftentimes with emerging mining opportunities, you see permitting risk, you see capital risk. Neither of those 2 risks are present with Luca because we have spent all the capital required. Anything from here is going to be fairly modest and financeable out of cash flow. And permits, every permit that we require is in hand and don't expect to be held up by any governmental permitting requirements. We expect to generate $30 to $40 million in free cash flow in 2025. That's probably a conservative estimate because we ran those numbers at commodity prices substantially below where we sit today. And we are applying that optimize, explore, expand concept to the resource and to our throughput. So the resource at both sites we expect to grow, and we expect to be able to push throughput substantially on an organic basis at both sites. We also expect to eliminate our debt in 2025, according to the debt repayment schedule, suggests by mid-2026. However, given the cash flow that we're generating and the cash that we have on hand, we would expect to eliminate that debt a little bit earlier, certainly one of my big focuses. So where are we headed? The goal for the company in the medium to longer term, 200,000 ounces gold equivalent production, and that's going to be achieved both organically through growth from our two existing mines, as well as a renewed focus on M&A. So here are the catalysts for 2025 that I've been talking about for the past 4 months, many of which we have achieved, others of which are in progress, and the balance we expect to achieve over the course of the year. So in Q1 of this year, we commissioned Tawa Weto. We achieved commercial production in Q1. That means that we are processing about 1,000 tons per day. We've got 82% availability, so that's kind of full commercial production. And so now we're operating at a run rate with a goal to kind of move that up over the course of the upcoming quarters. Exploration at Tawa Weto. Yesterday, we just announced our second batch of drill results. That's going to be an ongoing effort over the course of the year and beyond. So we put out in February our first batch of assays in well over a decade, since 2013, in fact. And so we continue to discover exciting new gold zones as we continue that exploration effort, and I would expect to see substantially more investment in the exploration opportunity at Tawa Weto. Over at Campo Morado, we have ramped up throughput. When I came in last year, we were struggling to deliver 1,500 tons per day to a mill that was built to process 2,400 tons per day, so substantial underutilization of that mill. We have ramped that up to 2,000 tons per day. We did that in January, and we are consistently delivering 2,000 tons a day to the mill. The mill is actually built for 2,400 tons per day, so there's an organic opportunity that we will be focused on filling that mill and growing that throughput over the course of 2025 so that we can consistently deliver 2,400 tons per day of mineralized material to the mill. Secondly, we've got this optimization opportunity at Campo Morado. That is a metallurgically focused effort at the mill. We have several initiatives there that we're working on with the consulting firm Ausenco on. And really those focus on improving our metallurgical recoveries and improving our payabilities that we get. You would have noticed the difference between our production and our payable. We're really trying to close that gap. So that's something that we're focused on metallurgically. Exploration, as mentioned, neither one of the sites had had any meaningful exploration since 2020, in this case, since 2014. So again, we put out our first batch of drill results about 3 weeks ago. This is an ongoing effort at Campo Morado. And the exciting thing that we're starting to talk about it on an increasing basis is the focus on gold. Obviously, with gold at $3,400 today, there's an opportunity for us to really focus on the higher grade gold zones at Campo Morado. So as we continue to ramp up our exploration efforts at Campo Morado, there's going to be an increasing focus on some of the gold zones, including the Reforma deposit, which is about 50% higher grade gold than the deposit as a whole. Lastly, on the corporate basis, we're going to be focused on paying down debt. As I mentioned, I would hope to be able to do that by this quarter or next. Again, we put out an update on our balance sheet and cash balance and capital structure last week. We mentioned that we had $21 million in cash, debt of $8.5 million, so in a net cash position, and very much focused on getting debt-free. Getting debt-free offers us a great deal of flexibility to focus on other meaningful opportunities, including exploration, including capital improvements at the mines, M&A, and then ultimately potentially returning capital to shareholders through buybacks and or dividends. Those will be down the road, of course, though. Lastly, we are ramping up our focus on M&A. We hired an M&A professional and fellow by the name of Adam Melnick to join us to focus on corporate development. And we think about M&A in 5 key ways. We think about our expertise in production, in exploration, in finance, in government relations, including permitting and otherwise, and community relations, including earning a social license to operate. And so we see that we have experience and expertise in those 5 core areas. And so what we're looking for is opportunities, probably in production, where we can bring our expertise in those 5 key areas to a mine or a company that is deficient in one or more of those areas. So again, it's operations, exploration, finance, political relations, and community relations. And so we think that there are many mines in Mexico that are suffering in one or more of those areas. And so we're looking for opportunities to bring our expertise to bear there on the M&A front. And we're very much focused on growing our portfolio to achieve that 200,000 ounce gold equivalent production sooner than later. So what do we get if we're able to execute on that business plan? We will have a company that has 2 permitted producing cash flow generating mines. That's going to be our foundation from which we grow. Those mines will have development, resource, and optimization upside, both at the mines, the mills, and on the exploration front. We'll have a clean balance sheet sooner than later, and we'll have 2 aggressive exploration programs, one at each site, both from underground and from surface, and particularly at Campo Morado, focusing on that gold opportunity. So I believe that that company, as I've described there on page 7, is going to have a market cap substantially above where we sit today as the market discovers Luca Mining and figures out exactly what we're focused on. Quickly on the assets, Campo Morado, it's a VMS-style deposit in Guerrero. We've got about a 7 to 10-year mine life. I think it's very interesting that the replacement value of what we've got on site is probably in excess of $500 million. That's sort of an internal estimate that we believe that it would cost to replicate what we've got on site there. And again, our market cap is just a little bit north of $250 million. So less than half the replacement value just at Campo Morado. We've got a 2,400 ton per day mill there. Again, we're focused on filling that mill. We're going to produce 54,000 to 64,000 ounces gold equivalent at this asset. Right now, we're generating 2 concentrates, and I'll talk a little bit more about our plan to go from a zinc concentrate and a bulk copper concentrate to a 3rd concentrate, and then ultimately start to focus on optimizing for precious metals. This year, we're going to invest $13 million in sustaining capital. Right now, we've got a budget of $1.3 million on the exploration front, but I would expect that exploration budget to grow quickly. I mentioned a little bit about the optimization program that we have at the mill. Right now, we're focused on what we call the Campo Morado Improvement Project. That was initiated in Q4 of 2023. It's ongoing. We're moving on to phase 3 of that. The big focus on phase 3 is moving from 2 concentrates to 3 concentrates, moving to a copper-lead separation implementation. And really what we expect to see there is increased payability for the copper. What that really means is that we're going to get paid more for every ton of copper concentrate that we deliver to the smelters. Why that is because we're not going to have lead in the copper concentrate. we're not going to have copper in the lead concentrate. So a separation there, meaning we get paid more. And then we also expect, as a function of this, for our recoveries to actually go up, meaning that there is more actual metal in the concentrate. So a very value-enhancing opportunity that we're focused on. The important thing to recognize about this is that it's a low capital, high impact, high IRR opportunity. And we think that there's lots of those, to use a cliche, low-hanging fruit to focus on at Campo Morado. Lastly, as we move into phase 4, we're going to start to evaluate opportunities to improve the gold recoveries, to look at potential to recover all of the precious metals that have gone into the tailings over the years, and then other additional opportunities. Moving to the exploration front, it's important to recognize at Campo Morado that there has been tens, if not hundreds of millions of dollars spent on exploration over the course of the last 25 years. There's almost 600,000 meters of drilling been done, thousands of soil samples, lots of geochem, gravity, et cetera. So it's a mine and a land package that has been studied extensively. What we've done is we've gone back and we've reevaluated the information that's been presented. We generated 38 high-quality exploration targets at site. We distilled that to a top 10, 4 of which are drill-ready, by which I mean that they are on land that is previously disturbed, so it's within our mining concession, which means that we can get out and we can start drilling immediately. We're actually in the process of mobilizing surface drills. And again, where the surface drilling is going to take place is going to be to the north of current mining activities, where we believe that there are additional gold-rich zones, particularly at the Reforma deposit at the Campo Morado mine. And we're really going to go out and look to optimize for that exploration opportunity on the gold. So if you think about where we're going with Campo Morado, we're going for higher grade gold. We're going to look to optimize the gold recoveries. And in a $3,400 gold price environment, there really is, to my mind, a spectacular opportunity to look at a step change in revenue from precious metals at Campo Morado. Over at Tawa Hueto, this is a smaller mine. It's 1,000 ton per day capacity. Again, we did reach commercial production this year at Campo Morado in Q1. This is more of a traditional epithermal gold, silver with a little bit of base metals. It's got a 10-year mine life, again, a brand new mine, replacement value of about $100 million between the drilling, the underground development, and the mine that's there on site. The mill that's on site. Again, it's a similar recovery system, zinc and a lead concentrate with the precious metals. This year, $10.5 million and a $2.6 million exploration budget. Again, I expect that exploration budget to grow. This is a photograph of Tawa Hueto. You can see it's built into a fairly steep hillside. We mine over on the right-hand side at the 12, the 14, and the 20 portals. Gravity is our friend here. We flow downhill to the crushing circuit, process plant, and then tails over the side of the valley into a tailings management facility further down the valley there. Why I like to show this photograph is because it sets up this opportunity here, which describes a little bit of what we're working on the exploration front. We mine in the middle of the top right schematic at the Creston vein and the Perdido vein. Drilling continues at Creston. We put out some very exciting drill results yesterday. It's a fairly narrow vein deposit, but it does have very exciting blowouts of breccias, which is what we announced yesterday. That gives us very impressive mining widths, 5+ meters. It lends itself to bulk underground mining methods, which allows us to push tons, which should ultimately lower our costs. So very active drilling right now, mainly from underground. We will start to mobilize for surface drilling. And again, it's going to be a very aggressive drilling program here at Tawa Hueto as we look to improve the grades and extend the mine life. Here's a little bit on the corporate side. We have 254 million shares outstanding on a fully diluted basis, 286. Market cap, we do it in Canadian, 350 million, which is about a 250 million US market cap. We've got debt of $8.5 million, cash of $21 million, a fairly modest now warrant position, about 12, 13 million warrants coming in. Interestingly, we were invited into, or we were selected for an index that led to a bit of a bump in our share price over the course of the last week, as we found about 6 million shares in buying as we were brought into this selective copper miners index. Analysts, we have two. Maxim, our friends in the US, $1.75 target price. Ventum, $1.50 Canadian. They actually just bumped their share price target after the site visit last week to $2.05. The shareholder base, again, I'm very much focused on this 6% institutional. I think that there's a big opportunity as our share price continues to rise, as our market cap gets bigger, as our liquidity improves, a big opportunity for us to crack the institutional market, which is very much a focus of mine. Lastly, on the team, I think that we've got a team that's extraordinary for a company of our size. On the top right, Neil O'Brien and Phil Brummett, both ex-Lundin Mining. Neil was Lucas Lundin's right-hand man for about 20 years, built Lundin Mining from a single asset zinc mine in Sweden to a much larger company, obviously a multi-billion-dollar company developing one of the most important copper mines on the planet at the moment. Phil Brummett also was a mine GM at Candelaria, which is a big copper open pit and underground mine in Chile for the Lundin Group. Ruben is a very well-connected Mexican businessman. David Rhodes and Peter, both London-based mining financiers, and Rory, a securities lawyer here in Vancouver. Management team, myself, as I mentioned, a former investment banker. Ramon Perez grew up in Mexico, based in Miami. He's our president and, for all intents and purposes, country manager in Mexico. Paul, very successful explorationist, joined us late last year and is guiding our exploration programs. Mentioned Adam Melnick. He's a former research analyst, fund manager, and previously a corporate development officer at a billion-dollar company. He joins us with a focus on M&A. Ramon and Armando, both very experienced operating people in Mexico. Armando's actually just left us as COO, so Ramon is our interim COO. Armando's a technical advisor. And then Lisa and Israel round out the finance team. So where are we headed? We are in the process of a re-rate here. We are building up our production profile at both mines, increasing revenues and cash flow. This is kind of where we sit on the left-hand side. We're in the midst of a valuation re-rate. That all has substantial upside. Production growing, I believe that we should be able to sustain 20% year-on-year production growth over the course of the next 2 years, doubling production. And then exploration at both sites. And then in the longer term, it's that M&A opportunity targeting a 200,000 ounce gold equivalent production profile by 2027. So that's really the story. We think that a company with a 200,000 ounce gold equivalent production profile likely gets to $1 billion market cap. So very substantial upside from here. So I'm going to turn it over to the questions here, start to review. I see quite a few. I see a question. What are you doing to communicate with the market and increase shareholder value? How are you bringing in new shareholders and increasing liquidity? Well, we're doing exactly events like this. We see these kind of webinars to be very value enhancing. I'm marketing all the time. I've done hundreds of meetings since I joined Luca Mining last year. We hosted research analysts to site last week, 5 research analysts from Canadian investment banks. I think that Many of them will start to pick up research coverage. So very much focused on bringing in new shareholders, lots of institutional marketing and so forth. What are the terms of the debt? The terms of the debt are, there's actually 3 different debt pieces. They bear interest at SOFR plus somewhere between 5 and 7, depending on each one of them. So 10 to 12% interest rate. Again, we're looking to get debt free. And the reason we're looking to get debt free is because our debt is actually all to our off-taker. And of course, when you owe your off-taker money, they have a lot of power over you. So we are looking to repay our debt and potentially have dialogues with our off-taker about the potential to improve some of our other terms. So very much focused on getting debt-free on all 3 of those debt pieces that we have. Catalysts for a re-rating. Well, look, I think it's all of the things that I've talked about in this presentation. I see getting debt-free as being a big catalyst. I see our quarterly production growth. I see our ability to generate ongoing free cash flow. And then I see potentially M&A and other opportunities that we see there. John, I see you again with who has the offtake. Our offtake is to Trafigura. Question here on AISC at Campo Morado. Our AISC is a little bit north of $2,000 an ounce. And the interesting thing at Campo Morado, this is why we don't focus too much on AISC, and I think it bears a little explanation. So it's a good question. Because we're a polymetallic mine and because we're about 50-50 between precious metals and base metals, but we do, and not to obfuscate or make anything unnecessarily complicated, but we present our numbers as gold equivalent. And the reality is that only about 35% of our production is from gold. So if we're thinking about our AISC, ironically, as gold price goes up, our AISC also goes up because it requires us to convert our zinc, our copper, our lead, our silver into gold. So every ounce equivalent that those base metals are converted into, it requires a higher number of pounds to be converted. And so really that's an opportunity. Well, it's our cash flow goes up, but our AISC also goes up because of the move in gold price. So it's a bit of a complicated scenario. Right now, we're expecting about $2,100-$2,200 on the AISC at Campo Morado. Still lots of margin there, but it's a real moving target because of the other metals that we produce. John, plans for share buyback, nothing imminent here. However, it's something that is on our radar screen. Again, the focus at this moment, debt repayment, very modest capital improvements, including the work that we're doing at the mill at Campo Morado, which is very much focused on improving recoveries and payabilities. If we get through all of that, we still have money left on our balance sheet. We'll be looking to contemplate some value-enhancing M&A. But if we do have money left over, and again, at these commodity prices, we think that that's a reasonable likelihood, we might look at a buyback. But again, that's down the priority list relative to other opportunities. I think I've come to the end of the questions. In my view, some very good and informative questions. Looks like we're coming right up to the end of the webinar here. So again, my name is Dan Barnholden. I'm the CEO. Feel free to get in touch, dbarnholden@lucamining.com. Thanks very much for tuning in, and appreciate all the support that we've gotten over the course of the last year.